Yo, what is up, guys? Back again with another episode. Day 26, the series coming close to an end, and today's episode is on confidence. And I've got a trade recap to show you guys as well, because this will link in very well. It was a lovely setup I saw on GU. I didn't expect to be trading on Friday because we had a Eurobank holiday, and we also had a bit of news, but it wasn't anything major during our trading session. So let's start off with the topic of confidence. Okay, this is very important trading, as well as your day-to-day life, because hey, these psychology videos will benefit your life as much as your trading. And confidence is a big one within trading because, hey, you tend to experience a lack of confidence even when, you get that hesitation. Let's say you're about to put a trade in. Everything's in place. Your strategy, you've seen your liquidity sweep, you've seen your breaker structure, we've seen our retrace. We're about to execute. Why are we still hesitating to put a trade in? Okay? And it's multiple reasons, because, hey, confidence is an emotion, and we want to keep the emotions out of trading. Or it's another reason, whether that be you haven't practiced enough, you haven't backtested enough, and we'll get into that, but you haven't fully understood each and every building block to trading. So you lack confidence in understanding each building block, whether that be your order block, your fair value gap, whatever. And yeah, I mean, all confidence really is it's it's a picture of you as a person. Okay? If you don't practice enough, you're more likely to be less confident, whether that be this test coming up. Okay? You haven't done enough practice. You haven't done enough questions. You haven't put the reps in order to see the bigger picture and achieve that. In this case, you haven't been following the boot camp day by day, and you're rushing it. Okay? You haven't taken the time out of your day to actually understand it. Because you could be watching the video, but are you watching the video? You know what I mean? I don't want you guys to just have this on the side. I want you to be actively engaging. I've made these videos short for a reason. Okay? Most of them are 15 minutes long, 10, 15 minutes long. I'm not asking for half of your day just to learn the skill of trading. I'm asking for 10, 15 minutes of your day to just learn one concept for that day. Okay? And then I want you to go out, do some practice. Yeah. So what are we going to do to sort out our confidence and our psychology when trading? We're going to be putting the reps in. Okay? We're going to be using risk management, because the reason why most traders have a lack of confidence is they're already scared of losing the money. Okay? We've got to understand that we are going to be taking risks, but these risks are going to be managed, so they're minimal. So with this, you're going to risk an amount you can mentally take. Okay? 0.5%. I reckon that is a fair do. 0.5% of your account. That's pretty fair. If you think you can take one and you're that confident, go for it. Because the only right way you're going to be able to deal with this is by putting in the work and having faith that you are a profitable trader and you understand how to trade. So yeah, and it all kind of links into like the psychology of, let's say, what's it called? Psychology of Money. I've been reading that. Yeah. There's a lot of concepts within the book, one of which, risk management. Simple. Yeah. You need to almost visualize things so you know what's going to happen, rather than always thinking of the outcome, the bad outcome. I want you to visualize things so everything's systematic. And you'll know what I mean by that, because the more experience you have within the markets, you'll start to realize, hey, I've seen this setup before. I've seen this market's moving very nicely. Like it's not choppy, you know what I mean? Everything's coinciding with one another. It's actually reacting off their value gaps rather than disrespecting. It's within my bias. So I'm going to take a trade because I've seen the setup so many times, And then there's other situations where you're like, okay, I'm a little iffy about this just because you haven't seen markets in certain ways. But hey, even then, if we lack the confidence to even take a trade, what do? Turn it off. Don't second guess it, turn it off. Why? Because we're going to trade on another day when we have the edge. We don't want the market having an edge on us. We want to have the edge. Okay? Whether that be an extra 10% edge on the market, it's an extra 10%. We take our probabilities. But even then, our strategy will work. And I trust me on this. Our strategy is meant to work. It's just a case of sticking to it and executing off the right times. But that's all for it today, for confidence. We'll quickly get into the trade recap, and yeah, we'll go back into the trading plan. So there's one concept you haven't learned on this, which is SMT. So just to make life easier for us, we're going to remove it. Yep. Okay. Market opens at 2:30, and I think I might need to make an episode on that. So grab your notebooks quickly. Notebook, notes, London session opens at 8:30. New York session opens at 2:30. Sorry about Asia session, because that is whack. So these are what we have to really take into account for. I'd start looking at the charts 30 minutes before. That's the best. 30, 45 minutes before. Open charts 30 minutes prior to open. So note this down, that you're going to need this, and it's actually again within our trade recap. So, like I said, within our trading system, we look at high time frames for liquidity sweeps. What did we do? We went into the 1 hour, the 4 hour. Okay, our overall bias was bearish because, as we know, to find our bearish bias, we will be using equilibrium. And as you can see, on Friday, we went into equilibrium. And I was like, okay, perfect. markets in an obvious downtrend, as we can see, and decided to stick into equilibrium, as we can see. So obvious would go down. Go in the 1 hour, find another sweep. Okay, market. I've marked out 2 o'clock. Oh no, I've marked out 2:30, and we see a sweep in the 1 hour. Say 1 hour, but oh no, we retrace into this. Actually, there wasn't a sweep. Oh no, there was a sweep here. There's a sweep. It's a 15-minute sweep. So we swept out these highs here. We have one high, these relatively equal highs, which is a very good draw on liquidity. Cannot emphasize that anymore. And we had this 15-minute fair value gap from a while back. I was like, okay, that looks good. We scale into the 5-minute, and we put equilibrium. We get an SMT, which again I can't really explain, or well, we have learned it, but hey, we get an SMT with Euro and GU. We decide to scale into the 1 minute. Yes, we do use 1 minute. 1 minute's quick, so I'd suggest using the 5-minute for now. But hey, we're scaling the 1 minute, and we do get our inverse fair value gap. So you obviously know inverse fair value gap is a rejection of a candle of a normal fair value gap. We reject that, make an inverse fair value gap, and we also break structure to the downside. As we can see, we broke structure to the downside, and I'm like, okay, very good indicator. This, and we create a fair value gap. So with that, we mark out equilibrium and fair value gap, because that is probabilities right there. 2 confluences. Okay, we usually use 1, but we had 2 more confluences. And yeah, we see that, and I'm like, okay, market's moving within my favor. And this is at around 218. I'm like, okay, let's wait a bit more and see if we can get something. Start chopping up a little, and we sweep this high again. Mate, just entering the fair value gap. I have this box here, as you can see. I want it to get as close as it can to 50% rather than just edging into the fair value gap. So we get that, and we again break structure in the 1 minute, and I'm like, okay, yeah, we're entering off this. This is textbook trading for me. Like a 5 pip stop loss. I haven't had a 5 pip stop loss since last summer. Because this is, I've stuck to lower risk to rewards, but this was a very clean setup. Saw that, and I was like, okay, let's enter. Get a nice entry over here. Stops above these highs, or this fair value gap. Usually it'd be like that, but you've got to take into account some spread. So just for safety, we put up there, and we targeted 15. I usually stick with 5 minutes and 15-minute lows, or 5 and 15-minute draws on liquidity. So our first draw on liquidity was, I think, a news push. Or was this? No, it was just this low. Yeah, our first draw on liquidity was this low. Very long wick. So we drew that to that low. Oh my gosh, the charts, man. Should be doing these trade recaps as soon as I take the trade. I drew to this low, very high probability area. Oh, it was equal lows, actually, relatively equal lows, as we know. Very strong draw on liquidity. And our final was this, I think, 30-minute or 1 hour low. Yeah, it was a 30-minute low. 30-minute low, and I was like, nice. There's fair value gap as well there. But it would have been a good time to execute some longs, but I decided to take my trade now rather than later because market usually loses volume quick. And yeah, I wasn't in this trade for long. I was only in it for about, what, let's say 224 till about, yeah, 250. So what, 30 minutes? And we managed to, still on the funded challenge, we managed to pull 344 from that trade itself. So my P&L for last week was 373 because we took that silly trade. So yeah, that's that for this week. Not bad. Profit's profit. So hopefully I'll pass this funded soon. Markets have been quite nice recently, like last week. There's been setups, it's just been a lack of psychology because it's doubt, you know. I've doubt within the markets because obviously market conditions have been really bad recently. So for me to have confidence within the markets, hey. But yeah, we won that trade. Secured a 1 to 3, securing profits. Stop loss was set to break even. But yeah, very, very nice trade. We didn't risk much as well. So hopefully next week's also a very nice trading week. And that is it for today's video. I'll catch you guys on the next one where we will be going over trading strategy part 2. So yeah, hopefully you guys enjoyed this video. Hope you take care of yourselves.